Nothing said on Empire is a recommendation to buy or sell any investments or products. All right, everyone, welcome back to the roundup. We have Santi, we have Rob. I tried to match you guys. I'm wearing a button-down shirt today, and you guys want a t-shirt.
You know, it's the last week of the summer. I'm not. I'm letting myself be a little more casual. Okay.
Yeah, I'm just trying to close the quarter and put on a suit and tie and make sure that he hits quota. But Rob and I don't have quota this quarter.
No, that's it. No, Santi's got no quota. Is because the quarter doesn't end in August. It ends in September.
That's right. That's right. That's right. That's right. Well, a monthly quota, or quarterly quota.
There you go. Rob, what were you saying?
Well, I was gonna say you do have a little bit of like I can imagine you in like Murray Hill at like 2023, like selling like point of sale systems.
I gotta go change my outfit. Hold on. That's the worst. That's the worst. Yeah, turtleback. That's horrible. That's horrible.
I'm sorry.
What are we talking about this week? Let's talk about markets. Santi, are you still bearish?
Bearish crypto or bearish the rest of the economy?
Bearish crypto.
Obviously, I got a lot of hate online. Someone saying, "Oh, that guy's I'm a plumber that is sidelined." For better or for worse, you can't be sidelined when you have all these bags that are vesting. So even if I wanted to sell, ladies and gentlemen, I can't just overnight just like, even if I'm bearish, I'm like, I still have positions in. I don't know. Go fucking look it up. I'm loving it because I'm a genius, not because other than I'm investing. So and locked. But I was writing about it. The short answer is I still don't think that you're getting paid enough to take this type of risk. Like there's still more risk, and I don't think the risk reward is there relative to other things, like other opportunities. I appreciate if you're only investing in crypto, feels like a good moment. The last episode we talked about Hyperliquid. We talked about, I was very surprised that Bitcoin didn't go below 60, and I felt we had bottom there. It was like, okay, Sailor sold. We were all in agreement that it felt like we could go much lower, and you're like, okay, if you didn't go below 60 after all of this stuff, it feels like a bottom. And we're in a very different state of the world today, so we should celebrate that. That's not a bad thing.
I mean, that was a tough time to record the pod, because I think hours after we recorded,
we recorded on Wednesday. Thursday was like the White House.
Thursday, yeah, exactly.
No, the White House thing happened like 2 hours after we recorded.
Oh, no, right, it was Wednesday. It was August 19th. Yeah. We recorded on the 19th, and then obviously they say we're going from 2 billion to 4 billion, and pump a bunch of liquidity in, and when that happened, it was very amazing. So the first thing that happened was you had this $2.7 billion short squeeze that happened, and then the more important thing I think though that happened is financial media quickly started writing how the debasement trade is back on. And so I don't think, Druck and all these guys are looking at crypto Twitter, but I do know they read Reuters and the Financial Times and the Journal every morning. And so when they all start writing that the debasement trade is back on, look, there's a clear reason to start buying, gold, obviously, but there's a higher beta gold here, which is Bitcoin.
But gold didn't trade well, has it?
No, it doesn't trade well. All went into Bitcoin, baby.
It's digital gold now, Santi. We're all in on digital.
I don't actually believe what I'm saying.
You know what it is, though? There's some really good content that was coming out of this week that I'll highlight later, so you guys can hang out for an hour and hear me not be bearish.
Was it David Senra or Patrick O'Shaughnessy?
Not Patrick O'Shaughnessy was very good. But no, what I'm trying to say is I've thought about a lot of this discussion around like which asset do you own? Like we know that the U.S. government debt is untenable. 20% of their budget is going to service debt. Like we all know that that's not good. The real question is like, where do you hide in that sort of train that eventually something, there's a reckoning, maybe there's not. And I've had this like constant discussion with people about it. And I always keep coming back to is I think you want to be in inflation proof assets. And if you run the simulation of like what happens, you want to be in technology, because technology is what produces the most amount of growth. And in many ways, like having Bitcoin is like, you don't want Bitcoin to be at $1 million per Bitcoin. that's a terrible state
because
of the
it means
world.
things have gone terribly wrong.
That means we're like bartering and the shit has really hit the fan, that you have way other problems in your portfolio in life, that it's like the insurance policy I don't want to buy because it makes me feel like, I mean, yeah. So I'd rather like
this revolution's coming for you, Santi. We get $1 million Bitcoin. Like, you're getting the guillotine. What? You're getting the guillotine right in the middle of Monaco.
Yes. Thanks for, doxing me around, but I'm not. In any case, I'd be really curious to get you guys' thoughts on it, because that's what I meant earlier opening the episode. I feel like we should celebrate. It feels great that crypto's back in the menu, that it's doing well. Founders that have grinded through it, that we've all backed. Look, obviously, I'm celebrating that. What I do struggle still is the risk reward here, because I still think like I would like to make sense of like, okay, the market's at an all-time high. It feels like it keeps climbing these walls of worry. We're going to talk about NVIDIA earnings that are, came out yesterday, stuff in Jackson Hole. But if you run the simulation of like what happens here till the end of the year, like rest of the year, if the markets go down, crypto is much more exposed. Like, we're no longer having conversations that crypto is like uncorrelated. Like that like was very much proved incorrect for,
crypto
has been uncorrelated to the equity market.
Been uncorrelated. The market has gone up and crypto has gone down.
You're right. It has been uncorrelated, but not in the way that you.
But even in the last week, the S&P went down, AI stocks went down, crypto went up.
The equity market hates what Besson is doing. Like, the equity, maybe hate is a strong word, but they have not liked what Besson is doing. They're worried about what it means for the global economy. Obviously, I mean, your guy Drunk came out and wrote the piece kind of talking about why he
he didn't how he went
support it. Are we acting like Santi knows Drunk now?
I just think he's a big Drunk guy,
He is a big Drunk guy. Yeah, he's a big Drunk
guy.
Well, the AI wrote it, but he kind of used the calculator to write it. But in any case, no. What I'm trying to say is like, no. You need to zoom out. It's not a hedge like in the way that we thought about it. Like 5 years ago, we're talking about like, it's not when you think about how you construct your portfolio, putting crypto in that bucket, and I appreciate Bitcoin might be different than all the other stuff, this is as high beta as it can possibly get. So that's all I'm saying is, when we go talk about the rest of the year, macro, what it means for crypto, is you ultimately bring it back to what Rob spends night and day thinking about is allocators, and do they have the appetite to put on more risk in their portfolio? I don't know. I would love to know.
Yeah, I mean,
I do think people chase, right? And like, FOMO is real. I mean, we've seen it. We haven't seen it in crypto recently, but we're seeing it in AI, right? Like, the instinct stuff is like a complete obvious example of this. That the chasing that people are doing.
Can we talk instinct? Can we go down that rabbit hole for a second?
For sure, yeah.
Have you used instinct, Rob?
I have.
Have you actually used instinct?
I have actually used it.
How could you say it's a mediocre product?
I didn't say it was a mediocre product, but Town's better.
Are you an investor in Town?
No, I'm not. And by the way,
no way Town is a better product.
And by the way, what is even better? The Atlas Concierge is better at all of like the normal stuff that the Concierge stuff does.
I will say Instinct is the best product experience I've had since Claude Code came out in, what was that, May or June of 2025, and since Chat came out in, what was that, November, December of 2022. It's the craziest product experience. It was.
I do not understand. Now, here I'll give one caveat.
Let's zoom out because people might be lost here. Like, what are these products?
Okay, so they're these chatbots. One of the dreams of, I think, AI is that you could just outsource all of a personal assistant in your pocket. And a lot of people have tried this. It has not worked up until, I would say, two things got released at the same time. One is Instinct and one is Grokbot. So Instinct is Grokbot is SpaceX's company, and it's like $250 a month. What's that?
Grokbot is also better than Instinct.
I've heard Grokbot is amazing, but it's $250 a month. It's $250 a month, and it's a separate app that you have to download called Grokbot, or just called Bot. I forget what the name is, but it's $250 a month. Instinct is a text that you can just text, and you give it access to a bunch of things, and it just does things for you. And I was delayed in Jackson Hole, and it did Like since it booked 5 flights for me, then went and got refunds for 4 of those flights, and then I landed at 5 a.m. So it had a car waiting for me when I got to the airport. I didn't touch a thing. I just texted this thing.
So listen, my point was not that Instinct isn't doing all of those things super well. Like the point that I was making on Twitter, which by the way, I think Instinct is a good product. You and I might be a little bit different because I am not going to give it access to all of my stuff because I just from an OpsX perspective. And so my usage of Instinct is maybe less robust than yours because I'm doing things that much more slowly in terms of how I give it access to a lot of my information. But for the things that the things that I think a normal American would use it for. So the things like all of the, it could be scheduling or it could be making reservations, checking into flights, changing flights, like that type of stuff, which I think a normal American would use it for. Is undifferentiated among the other people who are also doing a great job in the space. Now, like my point wasn't that like, oh, this isn't a good product. It's that there's like probably like 5 of these products now that do a really good job. And Instinct is actually a little bit more limited in some of them. Instinct can't make calls today, right? I had one of my agents on Atlas actually call my haircut place and ask why there wasn't a time for me next week with my preferred barber. And they told him that he was out on vacation. And then they had a back and forth with it about, okay, well, what times can we get me in as soon as possible? Because I felt I needed a haircut, right?
I'll admit, I don't know Atlas. I'll admit I've never used Atlas.
Yeah, so it's linked to a credit card. So it's like a high net worth credit card thing, right?
Okay, but you're saying normal Americans won't use Instinct, and
no,
then there's a high net worth credit card.
But the people who are using Instinct today are people who could get an Atlas card. The people who are using Instinct today are, there's another one called Carta, which also has a very good concierge, which does something similar. And so I think my point was that like, I think the world is going in this direction. I think it's these are incredibly useful products. I think that Instinct itself is somewhat undifferentiated among the other people who are building these great, useful products, but doesn't mean they're not useful and great. And so the fervor around it on Twitter about how everyone was like, oh, this is the best thing I've ever done. And also like now I got to put in money at 2.5 billion and then at 5 billion. Like all of that is groupthink because like, I bet you half of those people have not used any of these other products. Right. And so there is just a general dynamic in venture capital and in tech today that you bunch into things and you rush out the door, right? And there's like a little less like, I think just thoughtfulness around, where we put our money these days. And I do this personally too. So Santi and I were just talking about this before we went live. And so I like Instinct. I just don't think it is so much better than the alternative today.
Yeah. And there's an idea of, I think this market is rewarding people who buy higher highs, right?
Yeah.
So tying this all the way back to Santi's original point of, I think you were making a point around groupthink and people chase. And I think I would make it. Yeah, go ahead, Santi.
Willingness. Where are we in the state of the world's largest allocators, investors, and their willingness to continue to take on more risk at a time where markets are hitting an all-time high and we're in Jackson Hole and there's fears of debasement?
Yeah,
I think that is a $1 trillion question.
Here's a different way to maybe look at crypto, which is it's an asset class that has been beaten for dead, and you have these valuations that are getting completely crazy. So let's say Rob is right. And Instinct, by the way, Instinct, for those who don't know, is like a 2-person company. 23-year-old launched it, spun out of a company called Sierra, which is Brett Taylor's company. It's a brand new company. So these valuations are getting totally insane. Then let's go look at Hyperliquid, right? Hyperliquid did 154 million in revenue in Q1, 148 million dollars in Q2. That's a $600 million annual run rate. If you had a fintech company that was 3 years old doing $600 million in revenue with how many employees do they have? 13 or 14 or 11 or 12? Like sub 20 employees, it'd be one of the hottest companies in the entire world on the front page of everything. There wouldn't be an Instinct article in the journal. There'd be a Hyperliquid article in the journal. And even Solana, right? Like, maybe Solana's old news at this point, but like, I'm looking at Blockworks data right now. DEX volume, $3.3 billion of Solana DEX volume yesterday. 4.2 million non-vote transactions on Solana, 24 million trades yesterday alone, 2,100 transactions per second. Like, I think people, there's the other side of this, Santi, is like Bitcoin rips and then people start to investigate the industry again. There was a podcast with I think it was Harry Stebbings, 20VC. I didn't listen to it, but I watched a clip. It was Insight Ventures. I believe it was Insight Ventures, which is one of the most historic venture firms. And the founder of Insight Ventures said, Harry said, like what's a place that you think could be hot today that no one else is looking at? And he said, look, blockchains have been beaten down. There's definitely a lot of value in these things. I think they could have a resurgence. I'm paraphrasing.
But in fairness, look, let's talk about like what happened. Okay, Bitcoin rallies from 60 to 68, then now 70 plus. That obviously is a big train to drive everything else. But like the best performing stuff has been like Hyperliquid. It's now at 80 plus bucks, right? It's having, like, for all intents and purposes, like Hyperliquid and Pump have been some of the best performing assets that have rebounded the hardest. And that tells you everything that I think is not at odds with what I've been saying time and time again, which is like, if they're just printing cash. And like Hyperliquid is what Ethereum, back in the day, I was transporting myself to October 2021, where Ethereum was first time hitting 4,000 bucks. It was printing $44 million a day. Sit with that for a second. It was like, if you were to run rate that, which you should never do, ladies and gentlemen, you should take a sort of an average or through cycle per, but it was like on a run rate to do like 15, 16 billion in fees. And by the way, there was no L2s. It was going into the merge. There was talk about ETFs. Like, of course, transaction fees were like 7 to 15 bucks, which was the tell. Hyperliquid today, like, does not seem like a train that is going to slow down anytime soon, because you're going to have some of the largest IPOs later this year. You're going to have constant volatility in the markets and need to do price discovery 24/7, 365. And so like the real question is like, what is the upper bound of Hyperliquid fees? And Hype BVM, Rob, I know you talked about it. I want to go to you because he said, I feel like it's fairly valued last week. I feel like it's sort of stalled in its revenue, like in earnings potential. Do you still think that's the case, or have we changed our mind?
Oh yeah, I mean, from a multiple basis, like from any perspective, if it was like an equity, like it's fully valued. Clearly, what's happening now, and we talked about this last time when I said it was fully valued in April, and then it kind of was range bound for the last 4 or 5 months, and I got yelled at a little bit for that one. I think today, obviously, what people are underwriting is the Trump point, which Trump came on during his speech last week. I think it was Wednesday, and said, "Hey, we're trying to bring, or Chair Selig at the CFTC is trying to bring Hyperliquid into the U.S. to be fully compliant." And so the expectation, and that's when obviously things went from like, okay, well, it's trading sideways in this kind of range bound area to now it's up to like 82 bucks. So that was like whatever, that was like 60 something. And I think now you can dream again about, okay, well, it's not that it'll keep doing what it's doing, it'll make this many fees, and 600 million of annualized fees is okay. We totally get it. That's great. But like, at an $80 billion FTV, and I get I'd have to go back and do the math when I get the actual floating market cap is much less than that, but like it's still pretty fully valued. But now it's okay, well, what if it comes into the US, and what if, this, I think it was a Blockworks person, Shonda, who wrote this article about a way that could happen, which I disagree with, but is a point of view that people are talking about. And if that's true, well, now all of a sudden the TAM is not just people who are overseas or who want to trade 24/7 or who are doing this from a Reg R perspective. The TAM is now like U.S. large institutional capital markets. And by the way, like the Hyperliquid infrastructure is as good exchange infrastructure as we've seen. This is the way exchanges would be built today if they were built. And so like that Nasdaq has pretty good exchange infrastructure, but CME is like not great still. And so I think now it's okay. Well, let's price in the venture outcome, and that's what the market's obviously done the last last week.
I mean, like I was looking at the Blockworks data. If you want to pull it up about Hyperliquid, I should go back on something I said earlier in terms of like there's no end in sight in terms of the revenue growth. Like actually, if you look at quarterly revenue For Hyperliquid, it's actually been slightly down. Like it peaked in Q3 25. You had like 300 million of quarterly revenue then, and then it's sort of been a downtrend. It feels like it's stabilized. Like Q1 26, 161 million of quarterly revenue. Q2, 156. You've had sort of the last couple days exactly. What is the, where does it go from here?
Well,
Like,
remember, one thing I think that is worth noting about this is that so they have growth mode on in HIP3. And so growth mode means that essentially for the HIP3 markets, so all of the real world asset markets, they take 10% of the fees they do on the crypto markets. And so I think now HIP3 has been as high as 65% of the volume, depending on the time frame that you clip it on. So they're actually doing volume in these markets, but they're just much lower fee markets. But the reality is like they will have to be much lower fee if they are going to do this competition, like on CME or whatnot. I think it's like 4.5 bips, right? And so you have to come much down from there. And so I think where it goes from here, I think the question becomes like, can it actually enter the US in a real way? Can it be? There's still not really like large US institutions who are actually trading on Hyperliquid. There's people who buy per, like we talked about it last week, and there are people who want exposure to the token. But the current regulatory, murkiness that it sits in today, especially among Trade XYZ and those HIP3 markets and the ones that have people really excited, is put us into a situation where there's a lot of interest and there's a lot of retail and prosumer and like smaller market makers and takers, et cetera. But we're not yet in a place where, somebody like, name your person would feel comfortable actually going and trading on it. But now people believe that could be true in the future. And that's the reason for, the $20 change in price, not anything to do with the fundamentals.
Yeah. I think Hyperliquid is being caught more to your point around like Coinbases of the world, which is a much asset light, a much, much leaner. And like Coinbase is what, a $65 billion business today, maybe a little bit more, right? It's hovered between 40 and 60. Hyperliquid is like 40 on a fully diluted basis. Like, obviously it's less than that, like call it 18 today on a current market cap. Like you see, to me, that's the trade that people are doing. I think the interesting thing is just going back to Pump. Pump is basically cranking out very similar revenue, like a little bit under Hyperliquid, but it's a fraction of the valuation with, I think, like pretty interesting traction on some of the new products. Like if you pull up that dashboard, Yano, I was like, obviously, look, full disclosure, I'm an investor in Pump.
Which dashboard? You want the Pump dashboard?
The Pump one, yeah. But I do want to bring it home to like a relative valuation. Pump really has rebounded. And just take a look at that. Like,
we talked about, you want to look at revenue by product?
Well, and then total, do quarterly so we can just compare what we were talking about with Hyperliquid, because Hyperliquid, remember, folks, was cranking out like 160 of revenue. So on a quarterly basis, kind of call it a 150. Pump is cranking out, call it 100, 90 to 100, and it's a 1/40th of the valuation. No. It was like a 1 billion current market cap. Well, 1/8 of the valuation, sorry, on a current market cap basis. And obviously folks like Ansem and others have been super bullish on this, have gone. Like Martin Shkreli was on basically like live trading. And
he made a lot of money from that. There's a lot of incentive for the all of the people on Twitter and all of the content creators to be on.
That's right. The common denominator is both of these are the killer applications of crypto have been, it's super social and it's trading. And I think from that standpoint, I mean, help me. I would really try to, maybe someone here can help me make sense of like, why is there such a divergence in evaluation between the two?
What's the I think it's, no, go ahead, Yana.
No, I hear it.
Well, we can talk about the buybacks. I think they've slowed down the buybacks, and that's something that maybe
here. So I'll answer your question. So here, it's because of what is the vision for this company? what is the future for this company? So why is Pump moving up? People are talking about buybacks, and people are saying memes are getting reignited. That's not a future that excites me. The Pump founders, I think very highly of them. Noah and everyone else. I would, if I was giving them feedback, it's that they've done a horrendous job of telling the market what they're trying to build. Now you flip that, and I'll show you Hyperliquid. These are the numbers that matter to me on Hyperliquid, which is that that 29% of no, excuse me, that 38% of Q3 notional volume on Hyperliquid, 38% is not crypto related. So that when I look at this chart, I'm like, okay, my vision for crypto has been that every stock, bond, currency, and commodity would eventually come onto public blockchains, and we could trade all those things on public blockchains. And if Hyperliquid is the venue where you can do that stuff, man, that's a cool future. That's like 1,000 times bigger than we are today. I don't know what that is for Pump. And so I hope, like, someone should give Pump founders the advice that they should go talk about that.
They're not, and by the way, my portrayal is not there. One is like it's not a zero-sum game here is what I'm trying to portray. It's like Hyperliquid can be Hyperliquid is more like stealing the thunder of what Solana tried, the narrative of Solana, which is NASDAQ on the blockchain. And again, like Solana is, I still think a much relatively larger in market cap. Pump, on the other hand, is not necessarily competing against, and I don't think it's ever tried to go after this narrative. It's just like an eToro of sorts, which is, younger generations love. It's at this intersection of hyper social and trading, and similar to Robinhood. Actually, I comped Hyperliquid at Coinbase. Maybe the good comp there is, I don't know, CME or some other thing. And Pump is really eToro / Coinbase / social media, all in one. I think Ansem had a really good tweet that talked about, like, hey, why can't I like directly trade on X? Like, this would be a killer product.
Mm-hmm.
And I think that's right. I think younger generation, it's entertainment value. Like, people come on chain and start trading memes because it provides it. It's exciting.
I think we're in a story and narrative driven market. I thought that crypto would eventually look more like finance, and we would value these things on DCFs and financial models. Turns out I was completely wrong, and finance ends up looking a lot more like crypto, where what matters more than the revenue is the Palantir CEO getting on a chair and sitting cross-legged and seeming like he's done a bunch of drugs and like saying crazy things, and the stock goes up because the market likes that. And maybe that's just a sign of an inflated, bubbly market, and maybe we'll be having a very different conversation in 6 months and say that, oh, the DCF did matter. But right now, I think all markets in the world are driven by stories, and my only message to the Pump founders is that I love their business. Seems like they built a killer business. It's one of the biggest success stories. They're telling a terrible story to the market. The Hyperliquid founders are telling, or Jeff has his own way of telling stories, which is maybe not to tell the story, but the metrics are telling the story for him, which is why he doesn't have to do it. And so, yeah, it's a story-driven market right now. That's my take.
Yeah, I think that is a big part of it. And this was the point I made earlier, that, the $20 was entirely around what Trump came out and said. There was no change in fundamentals in the last week. It was what Trump said, a thing that was a new piece of information that made people believe that the TAM had gotten bigger and that the story was bigger than they had believed before. I also think there is just a general perspective now, because it keeps happening, and we talked about it in venture with Instinct, and I think it's happening with the traders, that you buy the winners and you just keep buying the winners, you keep buying the highs, and you don't try to, there is no such thing as value investing anymore. Like, value investing is a way to lose money and a way to underperform, right? And I think people are starting to buy that story, not just in crypto markets, but in general markets as well, right? There's a general perspective now that flows and storytelling and venture type outcomes matter more than anything. And at the same time, it's sort of all blending together, right? Because the Instinct thing, there was a tweet that someone else put out, I forget who it was, but it was like, oh, like the venture investors are now pricing these things like options, right? Which I think is actually kind of true, is that it's always been an option, but it's always been about finding alpha and like if supporting founders. And now it's just like, oh, well, like, can I put enough money into this thing to king make it? And so my option value is high enough, right? And that's kind of what's happening there. And at the same time, the public market investors are mostly just like bunching into things that they think can maybe get a venture style outcome in the public markets. And so the way people are pricing all capital markets today just feels very different generally than has ever been true in the past. And there does feel like public, private. I mean, there's still this like multiple differential, but it does feel very much like the way of which people are putting frameworks around things are all converging. And it is bunch into the winners, king make the winners. Think a lot about what the future can be. Price growth, not value. Who cares about cash flows?
Welcome to Token 2049.
Token 2049 is back October 7th and 8th, bringing together 25,000 attendees, 300 speakers, and 500 exhibitors for the world's largest crypto event. Token 2049 is happening alongside and in partnership with our own Digital Asset Summit Asia, so you can experience both conferences in Singapore during the same week. Across Token 2049 week, there'll be more than 1,000 side events, culminating with After 2049 and Formula One weekend. And the speaker lineup is stacked. Shane Copland of Polymarket, Jeff Yon of Hyperliquid, Arthur Hayes, NASDAQ CEO, Adina Friedman, and many more. Join us in Singapore, October 7th and 8th for Token 2049 and Digital Asset Summit Asia. Avalanche Summit is coming to New York City, September 16th to 17th. Join the business and technology leaders building the next generation of financial products, enterprise systems, and consumer applications on-chain. Learn how blockchain is enabling faster settlement, more efficient markets, and new business models at Avalanche Summit NYC. Register for Avalanche Summit and use promo code BLOCKWORKS15. And ahead of the summit, you can track Avalanche tokenized equities alongside tokenized treasuries and their growing footprint on Avalanche. See the data for yourself with Blockworks Research's Avalanche Dashboard. And don't forget to join us in New York City for Avalanche Summit. You have the founder, right? Oh, Santi, you're muted, which means I get to talk over you here, which is you have the founder of Pump right now tweeting. He said Pump made 5 times Polymarket's revenue yesterday. Please make it make sense.
It's not true, by the way. That is like
this is a
jump
look.
In
Yeah,
one.
like I've been.
Well, it's just not true. But like he can. He's looking at like a DeFi Llama dashboard that is very wrong. But I understand.
Classic. Tales all this time.
I will say definitely agree with a lot of that. Like, I'll bring it back to something like you've had now. 2 companies, SpaceX and Anthropic, basically say that their TAMs are 28 and 30 trillion. Like Anthropic, and people are, that's to your point, Yano, that gets, and you're Rob, I think we're all agreeing here, that gets investors extremely excited. Like you want to see an infinite expanding TAM, as big as it gets. And maybe in a different decade, you would have been laughed out of the room and lost all credibility. But there are outcomes that are just so big now that you cannot put multiples and try to make sense of them. Like Nvidia buying Hugging Face, it offered to invest at $5 billion, it rejected it, then it came back and bought it at 12.6. It's made impressive. Like I think it was like on 150 million ARR. Like the pace of growth is incredible, but you can't make sense of it on a multiple basis. Like it just fundamentally does not make sense. And I think that's, Yana, to your point, I think probably that is the most articulate way I've heard someone describe why Hype will probably continue to trade at a much higher multiple than Pump, because the TAM for all assets is much, much larger than meme coins. As much as meme coins are a phenomenon that is here to stay and will, is a killer. It's found product market fit since the earliest of days in crypto. And go look at Pump revenue through cycle. Like, it was as durable as Hyperliquid's, but its TAM is not. Like Hyperliquid's TAM is multiples, maybe orders of magnitude bigger than Pump's will ever be in the current framing. And that probably explains a big discrepancy.
Let's flip a little bit. I like this. A good old token conversation. This is what happens in the bull, baby. So I think we should talk about Ethena. Ethena announced today that just they did it all in one fell swoop, right? So I'm going to read this post from the Ethena Foundation. We are excited to announce 4 updates regarding the Ethena ecosystem. 1, buyout of early investors. This was really interesting. So the Ethena Foundation executed a buyout of all locked tokens from from certain major seed investors that sold any ENA within the last 9 months. Rob, they buy your tokens?
I was going to say.
Did not buy our tokens. But we haven't been selling any ENA, so.
2, alignment of token and equity. The Ethena Foundation and Ethena Labs have reached agreement on a master framework agreement whereby IP and ownership of value accrued by the protocol is assigned to the foundation exclusively and governed by token holders with no residual cash flow due to equity investors in the labs entity. Awesome. Love that. 3, revenue buybacks. There's a governance proposal now live for the implementation of the fee switch, whereby net revenue accrued across all business lines under the Ethena brand will be used to programmatically buy back the Ethena token. So we've got fee switch and buybacks. And 4th is removal of monthly VC unlocks. The Ethena Foundation and lead investors have agreed to eliminate future overhang associated with monthly VC investor unlocks by releasing the unvested tokens. This is interesting.
That's a Kyle Samani thing. Just...
All team tokens remain locked for the original vesting schedules. This is exactly what you should do. I'll just say it, this is exactly what you should do. I also am biased. In the tweet thread, they came out and filed, they said, building further on improving transparency for the Ethena ecosystem stakeholders. Ethena is pleased to announce its participation in the Blockworks token transparency framework. So they disclosed everything here many of this for the first time ever publicly: entity structure, supply and investing schedules, insider allocations, foundation agreements, protocol value retention. I messaged Guy. I didn't know this was coming, but I said, just amazing job here. I think this is exactly what teams should be doing. I hope that this is a model. I think many teams have started to look at this, but I hope a team as good as Ethena and as important to the whole industry as Ethena doing this, I hope other teams can, take note. And I thought Felipe from Thea said it best. He said, token capital markets are now in a much better place than they were a year ago. Many large tokens have solved the token equity issues and worked through low float, high FTV overhang. There's much less leverage in the system and valuations are much more reasonable. This is a good setup. So I think
it's great. Shut up and show me the chart. Athena's up 25%. Market's liking it. And it's the right thing to do. I wonder, Rob, a little bit more insight on how they actually removed all the, did they just buy out investors that had been selling and just unlocked everything?
Yeah, I'll have to be careful about what I can say and what I can't. But
you can say everything, Rob. It's okay.
Rob, you have that tab open that we're seeing here.
And in case anyone who's listening to the pod doesn't know, but Dragonfly led the seed of Ethena, and then we were also large investors in the A, and then a kind of a further public round that they did, and so we've been the largest investors for Ethena for a long time. It is essentially exactly what he said, right? Which is for anybody who had been, selling the token on Unlock or had been selling tokens in Ethena for the last 9 months or so, they offered to buy them out, and I think basically everybody took it, and that included obviously the unvested tokens. They also decided that Santi alluded to Kyle Samani earlier, but didn't elaborate. But Kyle Samani has this point that he says a lot, which is that it would be better if tokens actually all were just completely unlocked all the time, and because that allows for real price discovery. You don't have these monthly overhangs, and so for all of the remaining investors and advisors, they're now their tokens are completely unlocked. So there is no vesting schedule. You don't have to worry about this day every month somebody might be selling, et cetera. And so there should be more price discovery, but that also means there is actually more liquid tokens today than there was before today. But importantly, he kept the team vesting going, which means that the team is still aligned with the protocol over the long run. And so, when he came to us and he proposed this, I think we were all I initially really liked the idea, but we're trying to figure out how we thought the market would react, because you have these two sides, which is that you kind of get rid of all of this overhang from people who were indicating that they were sellers at these levels, but there are, kind of a pot of tokens that are now potentially, out there and are liquid that they weren't before. But I think my perspective, and now it looks to be being vindicated, was that like this is the what you want. You want real price discovery. You want people to be able to feel comfortable that they know what is happening and that that there is an asymmetric information with like other holders of the tokens, and you want there to be a situation where you don't feel like this has I can't underrate the long term of how this might go and perform, even if the revenue goes up, right? Like that's a lot of the concern, right? And so now we'll get real price discovery. People seem to be excited about it. I think obviously doing the token
there was good
transfer.
price discovery.
What's that?
There was good price discovery, right? I mean, they
No, I
had like
agree.
8 million. I mean, it was like on a circulating versus fully diluted. There was like over 60% of 70% of the tokens were already in circulation. So like, I mean, it's been a brutal market. So it was down like 75%, as is everything else. This definitely helps because you're at a point where probably the residual is small enough that you can buy it, and there's just some people that have been like dumping constantly, and the beauty and the good and the bad thing about crypto is that you can see that, and it's very well telegraphed, and it doesn't inspire much confidence. A lot of the ENA is now locked though in DATs, right? I mean, like that's the other component here, right? And
yeah, but big portion. I think it's like over 20% is locked in USDE, the DAT, which that's been like the best performing asset over the last week has been USDE. I will say
I'm not a genius and not sideline, ladies and gentlemen. I have exposure to ENA because I invested in this DAT. So there you go. Although you could have sold at $1. Now it's $8 or so.
Yeah.
So.
No, I agree with you. There's been good price discovery, but I think if you're you run a public company, you run a token project, like what do you want? You want to take your equity or your token and put it in the hands of people who want to be sellers to people who want to be buyers and want to hold for the long run, and that allows you to do this now at a time when the market seems to be waking up, and so and it happened at a time when he also came out and he announced that they're trying to put the fee switch on and that they're aligning all of the value accrual back to the token, and that's what the market wants to see, and because the market wants to see that, and now you have this the situation, like I think I'm very bullish on Guy's ability to continue to execute, and so I expect they'll do really well, and that there's he's got a lot of other good things coming down the pipe to continue to make Ethena bigger business.
On that point, can we spend a minute, because we talked about a lot about like, okay, stablecoins are a big theme. How do you go long stablecoins? Is a question that I constantly get asked by people that are coming, especially new to crypto. They're like, hey, these things, stablecoins are really working. Other than Circle, and maybe Tether, if they raise around or not, I don't know. We've talked about Ethena. What is the latest? Because we also have talked a lot about like just yields coming down quite a bit on chain, that it just doesn't make sense. And I think this touches on like macro, the first question we started the podcast, because you kind of need to have a view on macro and on-chain rates to form a thesis on Ethena going forward. And I know they've done a lot of, historically, the Ethena model was like to basically a tokenized hedge fund of sorts, where it's like your yield comes from the funding rate, which is well understood, and it works really well in the bull market, maybe not so well in a bear market, but typically that positive that is how like the yield on Ethena historically had been really interesting. It came down quite a bit, and I think is what is reflected, a big part of what is reflected in the token price. What are the prospects of the project diversifying away from that? Like, what is your thinking around like yields coming back, and what does that look like? Going back to like what drives the marginal buyer for ENA, I think you need to have a view on like what rates are.
I mean, they've been pretty clear. So I forget exactly when it was announced, but they announced it earlier this year that they weren't just going to be basis on crypto, on ETH and Bitcoin, and so there is they've diversified into basis and equity markets as well. Also, very like secured lending. I think they announced that they did this $1 billion deal with FalconX to do secured lending. They also are working with Janus Henderson. They're working with BlackRock on a number of, call it a slightly higher yielding collateral. But like, Janus, I think, is their CLO product. So their collateralized loan obligation product that's a little higher yielding. And so they'll continue to diversify their collateral, the way in which they make, which they create yield. So I don't actually think it requires a big, a view on the forward curve of on-chain yield. What I think it requires is a view on on-chain finance getting better. There needing to be a yield asset that sits underneath a lot of pieces of on-chain finance, and their ability as a team to find the best risk-adjusted yield to power that on-chain finance. I think that's what it requires, and I think Guy is as good as anybody at being able to do that.
You forgot Robinhood there. I think it's announced quite recently, so they're playing.
Yeah, they're powering the Robinhood. They're on Robinhood chain for the Vault product there. They're also on Coinbase for the Vault product there. They've got, and they've as you can imagine, they're having those discussions with all the fintechs.
I guess implicit in that is you're assuming, okay, if crypto continues to catch a bid, there's more demand for these assets. The basis trade obviously works really well in a bull market, not so well in a bear market. So you combine that with, if on-chain rates somewhat follow off-chain, like traditional rates, and if rates go up, the rates on-chain should go up as well. So that benefits Ethena, right?
Well, I also think they're going to do a better job of, or continue to do a good job of making sure that they find the best risk-adjusted yield, whether on-chain or off-chain. And and it doesn't just need to be, a lot of other people are just sitting in treasuries or just sitting in one product. They've made it very clear, like, they're not going to do that. And so then it's, how do they become distribution as a piece of collateral or a piece of a token that underlies all of the rest of this on-chain finance that's happening, right? And so, like, we don't really have like in crypto today, we have stablecoins. And stablecoins are kind of the quote asset, and they're the collateral asset for the vast majority of things that happen on chain. But there is certainly a world in which Ethena, which is a slightly higher yielding asset, call it a money market fund plus, and then some basis, and then some some CLOs and things like that, where there can be, it's like you're using a, call it a slightly higher yielding asset as collateral. So whether that's, we see some of this in the traditional world where people have used money market funds before as collateral instead of just US dollars. And so I think that's what you have to have a view on, which is that they will continue to win distribution across the rest of the ecosystem. They will have people want to use it as infrastructure for trading terminals, and for exchanges, and for a lot of the rest of, like, the lending ecosystem in crypto. And then at the same time, there'll be a trusted party who can get you a very, very good low risk or risk adjusted yield.
Just to tie up this discussion, because we talked about hype, we talked about pump, we also shared revenue. I'm looking at, obviously, the Ethena fees, and it's been pretty interesting. Like, even as back to my earlier point, even as like the funding rates come down, like they've still managed to produce pretty durable kind of revenue through that. They peaked at like 162 million in revenue in Q3 of 25. That's come down now to, call it, 56. So it's been a steady decline, but I think it's pretty interesting where that goes from here. But again, protocol that is, I think it's at a very similar valuation of pump, and pump is producing basically 2x the revenues. Again, this goes back to the TAM and the interest of, like, new capital coming into the space. Probably likes Hyperliquid, probably likes Ethena much, much more, for the simple reasons that it's just a much bigger TAM. Like, it really, stablecoins just capture the imagination.
Unless Pump is able to do what FOMO did, which is onboard a bunch of normie users. And I know, Rob made the good point, they're not the same thing, but I'm just saying the customer acquisition that FOMO's been able to do, that could, I think Pump needs a little bit of that. So
what is I know you recorded a podcast. Can you just do what is the one liner on, because FOMO has been growing quite, it might be the breakout app of this if we want to call it a news cycle. But what have they done exceptionally well?
Build a really beautiful product experience that feels really, really easy to use and not crypto native at all. It just feels beautiful to use. And combine that with very data-driven customer acquisition through off crypto Twitter platforms. That's how I would describe it.
Do you think you think that was an opportunity that Phantom gave up or lost?
I think it's an opportunity that everyone in crypto has not done very well. Like they're one of the first to really capitalize on TikTok and Instagram in an amazing way. And did Phantom not do it right? Yeah, but you know who did FOMO? The first time I ever saw FOMO, I thought of the Tensor guys when they built.
Yeah.
So do you remember Tensor went and built Vector?
Yes. Well, it got acquired by Coinbase.
Vector is what FOMO could have been what FOMO is today. Vector was the closest thing. I don't know if you ever used it. It was a great app. It was so fun to use. It was what FOMO could have been. So that is what I think
what Vector could have been.
What Vector could have been. Yes.
Yeah.
Yeah. I mean, it's the thesis that finance and social and trading and social are coming together has been one that I think a number of people have shared for a long time, and was even part of the reason that we underwrote Polymarket in that way. But that's been very clear that the time is now, and FOMO built this great product, had this great marketing machine at a time when that has really blown up, right? And so the social aspect to it, and I think it's unlocked this virality and this sort of I don't want to say addictive, but sort of addictive nature of these products, where people are just they love to come on, they like to engage with people on them, they like to both trade, but also engage with the content creators, but also those content creators like to engage with their fans. And so it's become a very, very social experience in the way that, I think honestly trading crypto has been for a lot of people through the timeline for a while, but now you can do it directly on platform.
Guys, anything else we didn't talk about that we should?
I was just say, of course, NVIDIA earnings. Everyone should be talking about NVIDIA earnings as important as the Fed. But for anyone that did not,
have you taken any chips off the table with anything that you hold in AI or equities?
Haven't made a trade in a long time. I mean, I've not underlying tokens. I've had other structured products and stuff like that. But no, I have not.
So, Santi, are you worried about this insider trading investigation into Leo?
No, for the simple reason that it doesn't affect markets, because Citadel took over his book and they already offloaded 80% of it. So, or 100% of it. They had a really good quarter, or month. I think they were up 5-6%. Citadel did, but I mean, there were the gist of it is what he is married. He just got married to the Anthropic chief of staff, and they're all roommates. I think the semi-analysis guy, Dorkesh, and it's all
boy. You know who else was roommates? Oh boy.
Who?
SBF.
FTX. I think the gist of it is more that also, and the reason I ask, I know you and Leo have a parasocial relationship, but I.
What are you talking about, Rob? I'm on the other side of the world, brother in Christ.
But I also it feels very plausible to me that this is true, because obviously everything Anthropic is doing, investing in Anthropic itself is obviously fine. Private markets have different standards, but a lot of what Anthropic is doing is cutting deals, and they know a lot of information about what's happening at the public companies, and of course then he's trading a lot of these public companies. I think it also I saw a tweet where the tweet stuff wasn't great, but it sort of was talking about the difference in how venture capital and tech works versus how public markets investors work, and how people generally in private markets they their whole job is to essentially trade on inside information, but in the way that what I mean by that is not in public markets, but you want to have asymmetric information about what private market companies are doing well, so then you can then go and try to fund them. And so there's this people just take it a lot less serious than in the tech world and in Silicon Valley than they do in call it New York hedge funds, where people are deathly afraid of slipping up. because the public markets have this different standard. And so it wouldn't surprise me that a 23-year-old who has spent his entire career in high growth like private markets would make that mistake.
Well, we'll see, because you bring up an interesting point for a later conversation, which is that there's a whole lot more liquidity in private markets today that just the lines between public and private are largely irrelevant in my mind, other than rulemaking that just was at a time where private markets were like way smaller relative to public markets. Like, so that's interesting. I mean, obviously every major fund from Quote to Altimeter to Gavin Baker's fund, like they're all crossover. And Tiger, of course, has done this for a really long time, because they, as they should, realize there's a lot of value to capture. Interesting question. Yeah, I mean, I remember when I was at SageView, it was a hybrid fund, and we were looking at, and then we transitioned to fully private, like just doing growth. But I've always felt that like a hybrid approach is really interesting, because you might be looking at a private company and you look at their churn and you look at their data, and then you say, well, it's better to invest in Salesforce because I'm looking at a Salesforce competitor. I'd much rather put it in the public markets. Like, if you can traffic across private and publics, if you still want to make that distinction, then you should. But yeah, it's we'll see. I think it might be, I have not followed this at all, but it will probably be a pretty interesting case to follow.
Content of the week. The 55-minute episode for August 27th. It's pretty good.
No doubt. I mean,
no doubt.
No doubt. Yes. Yeah, we can keep going if you'd like. Maybe we should live stream. Content of the week. I have two. I'm gonna cheat. I know it's one is invest like the best, and this guy's
dude, we're banned. We're putting a 30-day ban on invest like the best and David Senra. We have no range. We have an embarrassing lack of range on this podcast.
No, man, this is a very good episode. This guy, Neil Mova, he used to work at NVIDIA and Apple before that. If you really want to understand, here's a very good way of describing, the state of affairs of the world. Like, I really enjoyed that podcast. Worth your time. The other one is semi-analysis, this discussion between Darkesh and Dylan Patel. Very good. The reason why I like listening to these AI podcasts is I think it really just, you have to be paying attention to this stuff. And no matter what business you're in and no matter what industry you're in, like, it's super relevant to understand, like, the state of model is open source versus closed. It really informs a lot of, so those two I found really interesting. They're all came out this week. I would highly encourage you guys to listen.
Rob, what do you got?
I recently reread the Creative Act, Rick Rubin's book. I assume you guys have both read it. And I don't know, I just felt I had read it, a few years ago, and it felt like more apt to me today than it did even a few years ago. Just almost like in the age of AI, like creativity like matters more, and like the way of which you produce things and you bring things to life, I think is almost more creative or more of an art than it ever has been. And so I don't know. I had a different lens on it this time, and I liked it more the second time. So, I will recommend a reread to anybody.
Can I ask you a question, Rob, real quick on that?
Yeah.
What do you think about, like, Stan Druckenmiller? Of course, it seems like he used AI to write this.
They definitely used AI.
Yeah. Do you have an issue with it?
No, I don't have an issue with people using AI to write. Now, I think with that article specifically, I thought he did not, like, it was sort of AI sloppy, which not like the content itself, but like the writing. Like at this point, I think most of us can pretty much almost always spot like when something has been written by AI and when it hasn't. And I think I have a perspective that, this is a tool to help you write in the same way, there are many, many other tools, but to try to distill it into something that, maybe feels a little bit more human and that, is a little bit a little takes a little bit more thought. And so it almost felt to me like he had a point he wanted to get across really quickly, get the op-ed out, and he like had Claude go and write it for him, versus like spending a little bit more time with it. So I think people would have given him a lot less slack had he, just taken the ideas, had Claude write, most of it, and then sort of edited it a little bit more thoroughly. Like that, people would have given him a little bit more slack there. But that said, I mean, there was a good point that somebody made, which was like, well, what people in, a year ago or 3 years ago, he probably would have just had that thing ghostwritten. All right. And we wouldn't have given him anything, any crap for that. And so it is just generally true that people use tools to write. And, the point is what matters more. So I don't have any concern with it, but I do think people are going to, for a while, react negatively to things that seem like they're obviously made by AI and that you didn't spend real time on it.
Handwritten.
Cursive only. Did you write in cursive? Did you learn cursive when you were a kid?
Dude, I only write cursive. I have beautiful handwriting. I've been told.
Yeah, you do actually. You do have beautiful handwriting.
Rob, why do you know his handwriting?
Rob and I write love letters to each other.
Pen pals.
We're pen pals.
Sorry, I meant to say pen pal.
He had a handwritten note from me last time I visited him. So, it was very nice.
Yana, what's your content of the week, man?
Content of the week is
before we really
that Jackson Hole trip I had, I ended up having a 26-hour travel day. So I got to the airport at 8 a.m.
I jinxed it, right? Didn't I?
What did you say?
I said it's really hard to fly into that airport. It's like
you did.
If you can't fly at night, I'm sorry, man. I'm really sorry.
I had 12 hours at the Jackson Hole airport, which is a tiny airport. There's not 12 hours worth of stuff to do. End up connecting to Denver. Denver flight gets pushed like 5 more hours. Fly into New York, land at 5 a.m. in Newark, and then have to drive 3 hours to the North Fork. So it was like 26-hour travel.
Can I ask you a question? Why did you not just go back to Jackson Hole a half an hour away from the airport?
What do you mean?
You said you were in the airport for 12 hours?
Oh, because they kept saying 1 hour later. It was the worst type of plane delay where they go, flights at 10, flights at 10:30, flights at noon, flights at 1:30. It's the worst type of delay. Anyways, that's what happened. So I watched all of this show, Shane Gillis's show, Tires. So that's my fiction. I'm trying to bring some fiction to this,
Good. It's not as good as my fiction, but okay. So.
You guys you don't know Shane Gillis? Come on.
No, I know Shane Gillis. I just haven't seen it.
Little culture here, Santi. Little culture.
No, I know this guy. I just don't know the name. I'm terrible with names.
He's a funny fella. Anyways, he's got a show on Netflix called Tires. I was desperate for things to do. I made all my calls, got through all my emails, got through everything on it.
Well, clearly you didn't do anything because you had this app do everything for you. So you're incredibly lazy and unproductive, man. You got to get back to work.
Back to work. All right. Thanks for listening, folks. Happy end of August. We will see you in September. Nothing said on Empire is a recommendation to buy or sell any investments or products. This podcast is for informational purposes only, and the views expressed by anyone on the show are solely their opinions, not financial advice or necessarily the views of Blockworks. Our hosts, guests, and the Blockworks team may hold positions in the companies, funds, or projects discussed.